Vasileios, the move in the dollar, what explains it?
Well, to a large extent, in the very short term, has definitely been in political developments, because I think the market's patience with the U.S. administration and how it handles things is very thin. From a longer-term perspective, I think it's pretty much in line with our view that the dollar has been overvalued and it was due for a correction lower. 4 or 5 months ago, the momentum was very strong. Sentiment was overwhelmingly bullish, but right now this has definitely turned.
Well, Michael, help me understand, though. I mean, if the dollar is reacting over the last day because of the events in Washington, why just the dollar? Why are we not seeing it in yields, in gold, in equities?
Well, I think at the moment we're seeing a lot of those flows redirected elsewhere. I mean, it's very clear that as far as the reflation narrative is concerned, other parts of the world have taken up the baton. It's very much emerging market centric, and a weaker dollar is a positive boon for recovery in real economies there. It's really let EMs off the hook, and of course the Eurozone, in terms of the incoming economic data, is the one region where the surprise indices are still consistently in positive territory. One of the things that I think is a complete disconnect, as you've alluded to in your lengthy preamble on what the goings-on in Washington, is the very low level of implied volatility along the US Treasury strip or on the MOVE index. I mean, if you look at various surveys of perceived levels of policy uncertainty in the US, that historically has had a very strong correlation with this index. At the moment, these things are just way out of whack.
So I'll try not to make this too lengthy, and it's not a preamble. And it doesn't come from Washington. It comes actually from Moscow. We're now told the Kremlin calls the Trump-Russia secrets report, quote, complete nonsense. I'm not sure if that's good for President Trump, that the Kremlin's backing him, or bad. I'm not sure. He'll have to decide that. So, Vasileios, let's come back to this dollar and you thinking it's overpriced. We are looking at an upward trend in Fed rate hikes, right? They've said they're going to be hiking their rates.
Right.
Unlike, for example, the ECB or the BOJ. Right. So there's a divergence there as a practical matter. So is that already priced in? Why is that?
Oh, I think definitely. I think definitely. And more than that is actually priced in. I mean, an assumption that we are making when we're making an assessment at each point in time is that the market at every point in time is at equilibrium. And I think for the past year, or even more so, the dollar has really diverged from that equilibrium value. You can actually see it in real rate differentials on trade-weighted terms. The dollar is running between 10 to 15% higher than what traditionally long-term relationships with real rate differentials would tell you. So I think the bottom line here is that there has been a frenzy with the dollar for various reasons, including the implementation of quantitative easing by the ECB 2 years ago and all that. But I think the market right now is making a much soberer assessment right now.
Here's what I don't understand on a base level. What does the last 24 hours mean for markets when it comes to Russia and President Trump?
If you look at the price action and pretty much the things we've discussed, that it's mostly a dollar story, but it's not really a risk story. I think the market is taking the view that as far as Trump and the U.S. administration are concerned, they are very much unlikely to deliver all the strength and robustness, but it's not going to be bad for global trade.
So Michael, do you agree with that? Is this the final death knell of the Trump trade when it comes to the dollar strength?
Yeah, I think so. We need to remember how the narrative is being rewritten when the market suits it. Prior to the presidential election November last year, we were told that a Trump victory would be calamitous for markets. Faced with the reality of it, all of a sudden, Donald Trump was going to be the best thing since sliced bread for risk. Now, of course, if you look at the forward GDP forecasts, if you look at the various statements out from the Fed, then certainly they're not expecting anything great on growth. And also, one has to remember that in the absence of any sort of supply side reform, the Fed in any sense thinks that the US economy has no slack, and if we did see higher growth at this juncture, that would just feed through into inflation and higher rates.